Hey, Money Multipliers. Welcome back to another episode of the Money Multiplier podcast. I'm your host, Hannah Kessler, and we ask ourselves, do our dollars make sense? So, y'all, it is payday today. You've got the direct deposit notification and life's feeling good. But before you go and rush off to spend it all on your coffees, your lattes, going to the pool halls, what I like to do, or the arcade, let's talk about creating a powerful payday routine that sets you up for the long-term financial freedom. And I am joined by a very special guest and one of my friends, I would even call him, Mr. Sean King. And we're going to show you how to make payday exciting and really strategic by weaving it into the infinite banking concept. So, Mr. Sean, what's going on, man? It's good to see you.
Happy Friday, my friend. Happy New Year. I don't know how long you're allowed to say Happy New Year for. Like, is it like two
A full
weeks? We
month?
going first month?
First month. I like
Yeah.
first month.
You're like, I haven't talked to you yet, so Happy New Year since I've talked to you. But yeah, happy to be here. Just redoing the favor. I had you on my show a couple weeks back, and happy to be on the Money Multiplier podcast. I got my little sticker here. I didn't wear my shirt this time. I think I wore my shirt last time.
You
So.
did. You're repping. Actually, today I took pictures. I posted on my Facebook and my Instagram.
Dad,
Dad was in the merch.
you look good in that sweater. You look pretty good in that sweater, son. I was like, I might need to cop me one of them sweaters.
Because, dude, you're feeling it too. It is cold in
Cold,
Florida
fucking cold.
right
It's
now.
raining. It's been raining all day here.
Yeah,
All
yeah.
day. Cold rain too. Not that warm Florida rain. This is cold rain.
Yes, yeah, yeah. And I always say there's a reason I live in Florida, so y'all can keep your cold weather up north.
I kind of like it. I like a little bit here and there, but when we getting cold and wet, you miss me on that one.
Nada. So, Sean, before we get into it, I want the listeners to know you. So, number one, I want you to share your podcast show. And then number two, how did you get here to where you're at now, teaching and talking about the infinite banking concept?
Definitely. So, yeah, you guys feel free to go check out my podcast, The Cash Flow Chronicles. You can find that anywhere podcasts are available, or check my other stuff out on YouTube, Legacy, Life, and Retirement. But I'm currently based, like Hannah said, out here in Florida. I'm in like West Florida, though, that small portion of Central Time that nobody knows that Florida actually has. So we're all the way over here in Lower Alabama. But married, been married for a little while now. Got an amazing wife. Got a little boy who turns one tomorrow. So not sure when this is
Wow.
coming out, but turns one on the 11th. So it's been a quick year. Uh, but to give you a little bit of my background and how I got here, how I'm sitting here chatting with Hannah right now, is my wife had started working from home for quite some time, especially over COVID, when they sent everybody home and they're like, hey, if you got a job that you can do from home, you can do it from home. So she had been doing property and casualty insurance for banks for, at that point in time, like 11 years, a business she had been in for a long time. And they said, hey, you can go ahead and you start working from home. And at that time, we were living in Washington State, and I decided, you know what? Well, we decided we think we want to start trying to have a child, start a family and whatnot. We had just bought our first home together, and so we were getting into that phase of our life. And basically, I decided I want to try and get a work from home job because I want to be around as much as possible around you when you're pregnant, go through this whole process to make sure you have everything that you need. And so I started looking online for gigs that I can get into where I could work from home. Now, outside of all the scam stuff that's out there, I came across two industries that I could potentially get into that seemed legit. Number one was technology based stuff. So whatever it was, coding, website building, all of that stuff. And I'm like, no chance. There's no chance that I can do this stuff. I don't have that capability in my brain. And the second one was life insurance, just basic. Let's talk to people about life insurance. And I'm like, you know what? I can get behind that. I have a really hard time getting excited about things that I'm not passionate about. But if there's one thing that I'm really passionate about, it's about family, it's about people. And so I felt like I could get behind helping people get educated about life insurance. So I started there with a company, really what we call an IMO, an independent marketing organization, that got me contracted with a bunch of different carriers, and I became essentially a broker, a life insurance broker. So I started talking to people about just the general stuff, term insurance, basic whole life for final expense, all that really basic stuff. And the focus was just on protecting the family. As I started to learn a little bit more about life insurance and get it for myself and start to implement it in my own life, the company that I was with started teaching me heavily about index universal life policies. That was the really big thing back a couple of years ago when it was really starting to break onto the scene. So I was like, oh my gosh, I'm just learning about life insurance and how valuable it is. And now you're telling me that there's life insurance that I can get access to the money in my life insurance. This seems great. Like the life portion of the life insurance I could utilize. So I spent quite a bit of time learning about that, teaching people about that. And I'm always looking for not the next best thing, but how to increase my knowledge. How can I continue to learn and grow about this stuff because it's super interesting and I wanted to just keep helping people. So the more I dug into the IUL stuff, the more uncomfortable and uncertain I started to become about when I lay my head down on my pillow at night after helping clients, I want to make sure that I did what's best for the client.
Yeah.
And so the more I started to look into the IUL, the more I kind of started to see some of the cracks that I felt weren't addressed as often or as frequent as I thought they should be. And so I started to get a little bit worried. Now, my company also offered the ability to start infinite banking policies through one specific company, but it's not something that they talked about that often. So there was a small group of people in that company. I started looking more and more into that. And as soon as I realized what this was and kind of what I thought IULs were, but this really actually was, I dove head into this, started doing a bunch of studying, bunch of reading books, all sorts of things. Quickly realized that the company I was with had a cap on the amount of knowledge that they could share with me and help me get educated about infinite banking. And so I decided to go out elsewhere and look for other people that were professional infinite banking practitioners, was listening to podcasts, doing all sorts of stuff, YouTube videos, and I happened to come across the Banking Bros, Jay Do and Jonah. Saw
Yep.
some of their stuff. I don't remember if it was on TikTok, Instagram, whatever it was, but I really liked their style. I'd actually seen Chris as well. Um, yeah, I just reached out to them and was like, hey, I've been doing this for a while. I have my own policy. I want to start getting taught by people who've been doing this for a very long time, like you guys have. And of course, they came back like, I don't know how serious you are about this. So we went through that process. They found out that I was legit and, my intentions were pure. And so I started teaming up with them. And of course, they're under the branch, under the umbrella of the Money Multiplier. And now I'm sitting here plugged in with you guys and absolutely loving life and really looking forward to 2025 and helping a lot of people understand this amazing concept that, we got our hands on.
Yes, yeah, yeah. Because we do, we'll go out, we teach, or we'll do webinars, and it's like everybody and their mother has their life insurance license, and then they hear
Mhm.
about this concept. They're like, "Ooh, can I do this?" And it is great, but I always use the term "big hat, no cattle," and so that's a lot of people are big hat, no cattle, and so that's why they had that barrier of okay. Is he really serious? Does he really
Yep.
want to do this? Or is he just chasing commission dollars? Because that's what you'll see too. And I know that is what kind of gives this industry a bad rep is that sometimes
Yes.
people are just chasing dollars. But I think it does shine through in their communication of when they're talking with people. You can really see down to earth and to their core of who that individual is and what their true intentions are. And so that's really why I vibe with you. You're very down to earth and we're really similar in a lot of spaces. So I enjoyed that about you. Let me ask you this question. And you don't got to answer it if you don't want to, but just curious.
Sure.
Even Chris had the same story where he was with New York Life for a long, long time, was a financial advisor, and he learned about this infinite banking concept and he brought it to his team and his boss, his higher up, and he says, "Hey, do you know about this black book, Becoming Your Own Banker? Do you know about IBC?" And his guy said, "Yeah, I do know about that. And he's like, well, why have you never told me about this? So I guess my question is that why did they not tell you about this? Or why was their knowledge capped? Or why were they really pushing maybe IULs? Is it easier? Or do you have opinions on that? I'm just curious.
I think it was just more of the sexy thing, like we talk about all the time. Infinite banking is not sexy. It's not, you're not going to see the numbers and be blown out of the water. And when you're not blown out of the water by the basic illustration, a lot of people get, they're not as excited. But when you show people those IUL illustrations, of course, not realistic, they're just illustrations, but they see those and they're like, ooh, this gets me excited because we know in this business, people are often focused on returns. What are the returns I'm getting? What's my money doing for me? They don't understand the concept of banking. So I think with them, again, with any company like that, I think the focus is on making money. How much money can we make? How profitable can we be? And when people are kind of oohing and ahhing over something that's more sexy and more popular at this time that a lot of people are talking about out on social media, I think that's where they put their energy and focus. I don't think it was malicious or anything like that. I think it's just kind of the way that the industry goes. But again, couldn't lay my head on my pillow at night knowing that there's a better option out there. And I just,
Yeah.
I decided to leave and go find the people that were doing what I wanted to be doing.
Your tribe. No, I get it. I
Yeah.
get it. Well, hey, in today's episode, what I want to talk about is four things that you should do once you get paid. So I know when we go out, we go work, and then at the end of the week or at the end of the month, you know the drill. You check your account, you pay your bills, maybe you splurge a little bit. There's
Hmm.
Sean
Hmm.
Doge counting his cash,
Yep.
and you
Ready.
hope that there's some left over at the end of the month after you pay all of those bills. And I almost call this like you're in a financial hamster wheel. Money comes in, money goes out, and you never really feel like you're in control of it. So, my biggest thing, and one thing that we always teach is rule number one, pay yourself first. And I know we've all heard that before. And I know it's the common, oh, okay, you should save 10%. That's the basic paycheck advice. But I'll even go deeper on my thoughts there. But I want to ask you, Sean, when you are implementing pay yourself first, what are you doing and what does that truly mean to you in your own personal life with your family? Hey, Money Multipliers, just real quick, I wanted to pop in for a second and just remind y'all we have the upcoming live mastermind event happening in Denver, Colorado, October 9, 10, and 11. Because I get it. I know times are so crazy right now, and we need to come together during these uncertain times and learn how to thrive as a community on the you and me level. So I want to see you down there. You can check out more info down below or check out the link, themoneymultiplier.com/mastermind 2025. All right, let's get into the episode.
So I have a very unique situation with my wife and I and my son. We live, I would say, with the amount of money we make, we live drastically below our means. So with her income, we're able to live off of less than her income alone. So when we're talking about pay ourselves first, any money that I make from anything that I do goes into our system as savings, goes into our, infinite banking system for future investments, all of that stuff. So we've made it a point, like you say, pay yourself first. We're paying ourselves 50, 60% of our income because that's how important paying ourselves first is to us. So again, I know most people aren't like that, but once you understand the value behind paying yourself first and what that's going to do for you later down the road, I think people start going from that 5% to 10% to, oh, maybe I should do 20 to 30% of my income. So
Yeah.
again, unique situation for us.
Yes, yes. And you should be tracking your stats. I
Mhm.
was just on doing my TV appearances. I was traveling around doing a little TV tour. And one of the things that I was bringing up is, keep it easy. Just make a basic T chart. I mean, y'all know I'm a huge advocate in my personal life for the Rocket Money app. That's just me
Mhm.
personally. I love it. But if you don't want to go do that and have it be tracked automatically, just write down on a piece of paper every single month, make that T chart. Okay, what did I bring in as my income? What was my expenses that went out? And how much am I keeping at the end of the month? Yeah, you need to know that. But before you even do that, I think you should at least take a little sliver of what you make and then set it to the side. Pay yourself first and then go pay everybody else next. And this is where the infinite banking concept comes into play, because by putting your money into your policy, you're not just saving, you're now growing a financial system that you control. And I kind of think of it like building a golden goose that just keeps laying eggs because of the uninterrupted compounding that keeps happening. That's really one of the reasons why, I would say one of my most favorite reasons as to why that I personally do this concept. But then now you have the immediate access to the cash value that if I need to finance these different purchases, I have the cash there that I can pull out from my banking system. And I'm not asked questions. I'm not asked, what am I using this money for? When am I going to be paying this money back? How am I going to be paying it back? It's all within me and my own control. So, number one, when y'all get paid, pay yourself first. And it should be into your whole life policy. That's just my humble opinion. But if
Okay.
nothing else, have that separate, segregated checking or savings account that you're just moving money into, and pay yourself first. Treat yourself as that number one asset. So, number
I
one,
think to touch on that, like make it automated.
yes.
When have it in your bank account. I know Chris talks about this all the time, and that's why it's so easy for people to put money into their qualified plans, their 401k, because they never really see it. And so it's just like, oh, if I don't see it, I don't have it. We'll do the same thing here. Set it up where when you get paid twice a week, every week, depending on what type of job that you have, set something up in your bank account where you have like Hannah said, a segregated bank account, and just have an automatic pull. So as soon as that money hits your account on the 1st and the 15th, some of that money is moved directly into a segregated bank account.
Yeah. And even more specifically, too, you made me think about, sometimes I get the question, hey, what is the best mode of premium I should do? Should I do monthly? Should I do quarterly, semi-annual, or annual premiums? And there's no right or wrong answer of how often you make your
Mhm.
premium deposits, but I always say match it up best to your cash flow. And
Mhm.
I would even add on to that, if you are the type of person that you operate better with out of sight, out of mind, and you just like those auto drafts, monthly may be a good premium for you to start off with right now, you
Yeah,
know?
definitely
Yeah.
agree.
So, number two, all right, so that was number one, pay yourself first. Number two, I would say, is plan for the essentials. This comes with the bills, the groceries, things that pop up in your life that maybe you didn't prep for. Let me just share a quick little story. I don't think I've shared the story yet on the pod. I've been talking about it a little bit in my life. But long story short, my conversion van got flooded in the recent hurricane that hit Florida. You would think that it would be safe inland, but I should have really brought it over here to beachside, over to where my condo's at, because it didn't flood over here. It only flooded inland, which is nuts to me. But I took it over to the Dodge dealership and they're doing their diagnostics on it, doing whatever they do. And Kayla is her name. She called me up and she says, hey, so we did the test, we had the mechanics and the technicians look over it, and you're going to need a new engine. And with engine cost and with labor, it's going to cost you $15,400. But let me tell you something that I felt. I didn't feel anxious about it, because I knew that I had the capital stored inside of my policies, prepping for this rainy day, that if I needed to, I can go and fund this thing through my own monies instead of freaking out about it and saying, oh my gosh, what do I do with this? Yeah, I'm in the process right now calling Allstate and all the insurance companies to get myself, hey, can you guys help me with this? We'll see. I haven't got answers yet, so I'll let y'all know how that goes. But really planning for the essentials is important. And I've talked about this a little bit on the pod, but this is what I do. I keep 3 months of my overhead expenses in my policies, and I keep 3 months inside of my checking accounts at the banks that I just like to do business with. So then I got 6 months of overhead expenses covered, and that's kind of like my emergency funds, or if I needed this money for something, I have the dollars there to fund for it, like in this instance where a flood hits Florida or a hurricane and I have this unexpected bill that comes up, right?
Yeah, Hannah, let me ask you this, because I had a very, I'm not saying a similar situation at all, but as far as mindset goes, when I had a bunch of money to pay off my student loans, and I hadn't yet got it into my policy, so I didn't want to take it and spend it. What's your mindset around if you would have had that 15,000 and it was just sitting in your savings account and you didn't have a policy where you could use OPM, other people's money, to pay that $15,000 engine costs? You actually had to use your money and you never see that 15,000 again. Like, talk about how that's such a benefit. Like, we're not using our money. Your 15K, once you throw that, to the engine people and they fix it, it's still working for you. It's still making you money. And I think that's incredible about this.
Hey, money multipliers! I have some exciting news. My dear friend, Mr. Larry Steinhaus, and myself, we're going to be hosting a 2-day live event in Tampa, Florida. So March 1st and 2nd, 2025. You can go and snag your tickets from moneygamelive.com or click the link right here down below. And we just got a speaker-filled lineup here. All of the elite experts in their areas of alternative investing, how to make your money work for you and get out of the financial shackles that you don't even realize that you're in. So I'm so excited to see all of y'all there. March 1st and 2nd, Tampa, Florida. MoneyGameLive.com. I'll see everybody then. Yes. That's the baseline. If I have my investor glasses on, that's what I always say, my investor glasses, because there's so many other benefits that come from a whole life contract that, in my opinion, we don't have in any other financial vehicle on this planet. And I always say, if y'all know of something that I don't know about, please call me up and tell me about it. But that's why I like to funnel the cash flow through my policies first, because once the dollars hit the policy, now I start earning the uninterrupted compounding inside of that policy. Matter of fact, I was just out in Sacramento. I was on Good Day Sacramento, the reason I was in California, and one of my clients live out there. And what's really fun about this business is that, yeah, I met this guy. We were speaking at an event in Scottsdale. I think it was like 2019. And ever since then, he's been hanging around. He's got quite a few policies and he uses this, but he always uses the analogy that it's a water wheel. This is my cash flow. And the idea is I want my cash flow to hit these different buckets before I go out and do something with it. And that's
Mm,
the whole mentality behind the policies, is I want it to
okay.
flow into my policy bucket first. Then through my policy bucket, I will go make that purchase, because you're exactly right. I'm taking out loans from my policy, not withdrawing the money. And when I'm taking
Mhm.
those loans, I'm not interrupting the compounding interest that happens inside of there.
Yep, exactly. So again, it gives you that permission to be able to spend that money and not be like, oh, it's gone forever. Nope, still working for you. You're going to pay it back, but it's still working for you. And that gives you that peace of mind.
Yes. Yep. So, number two, plan for the essentials. Understand too the cash flow that does go out to the different expenses. Rocket Money just needs to sponsor me at this point. But that's why I like them because I have picked up on subscriptions that I had no idea was even
Yep.
on there. And I'm like, oh my gosh, I'm still paying for this. I haven't been there or done that for like it's 6 months, a year. So let's just cut that thing off so that I'm saving back this $30 a month because that's a lot of money. If you start to add that up, $30 a month, that's a lot of money that's going out the door of things that I'm not using. So really track your stats. And I know it sounds so simple. And to be honest with you, it kind of is, but it's work. It's work that you actively got to do almost on a daily, even weekly, monthly basis. And so take the intentional time to set out for that, which kind of has me thinking, Sean, right now, you and Amanda, do
hmm
y'all set intentional time, maybe monthly, to look over your financials? How does that look?
Yep. So we've got a audit of our finances again coming up. And so I was actually just about to make a YouTube video about this because I think it's so important. I think just budgeting in general and understanding, like you said, the flow of your cash is extremely important. People often come to us and they're like, I want to get involved in this, but maybe I don't have the funds. Well, the suggestion and what we do is, hey, every month, if you're not on top of this, maybe every couple months, go and print out your statements. Like print out your statement from your credit card, print out your statement from your debit card, and just take a look at everything you spent for that month, all the things that are necessary that you need to stay alive, your car insurance, your home, your mortgage, your rent, whatever it may be, your groceries. But then highlight all of those little things that are kind of nonchalant expenses. Oh, I go to Starbucks 7 times a day. Oh, I'm over here spending $100 extra a week on Amazon stuff because I'm out here scrolling in the middle of the night looking for stuff that I can buy. If you go through and you do that audit, you'll quickly find where that extra cash, because almost everybody's like, oh, I should have extra cash at the end of the month, but I don't. Where did it go? Well, that's a great way to audit what you're doing and really find out what your habits are, where that money's going on a regular basis, because then you're able to find that extra cash and start, like Hannah said, flowing that into your policy.
Yep, yep. Sean, that was a perfect segue because number three, you should treat
Yep.
yourself and you
Treat
should be
yourself.
guilt-free about this.
hmm
But let's be real, payday should include a little bit of fun, but instead of the mindless spending that we do, what if you did budget this intentionally? Hey,
hmm
I can take $200 a month and go do something fun with my family or my spouse, but set that expectation or set that number amount. I'm actually thinking right now about how like Warren Buffett always talks about having his rules, right? When he's going
Yep.
into his trading, you should have your rules for yourself when you are treating yourself because it is life. You shouldn't be miserable because you're trying to save 90% of what you make. Yeah, that's really great if you are doing that, but you don't want to be miserable. This is your life and you should enjoy this life that you're building for yourself.
Agree. I do want to add a caveat to that. Unless you're in that season of your life where you're like, hey, man, I want to, again, we do everything in seasons. I'm not saying, just like Hannah, you shouldn't wait until you're 60, 65 to start enjoying your life because you've just been, you know, spending nothing this entire time. But if you're going to do that, if you're going to really hunker down, do it for a season, do it for 6 months, do it for a year, see what you're capable of doing. But I totally agree. You should definitely treat yourself. Most people are out there busting their asses and they deserve, I'm not saying a Starbucks, every couple, multiple times a day, but find your thing, budget it into your income.
Yeah.
And we have a miscellaneous category where like, hey, we know we're going to spend about an extra $100 a week. But when you track it, if I'm going over that, all right, I need to tie some things back. I need to pull it back a little bit. But we definitely treat ourselves.
Yeah. Hey, and you know what's kind of fun too? I've been experiencing this with my girlfriends in my life. I actually, before we started this recording, I was talking with my one girlfriend, Joy, and Joy did tell me, like back in October when I saw her last up in Nashville at our mastermind event, she says, "Hey, I just want to let you know, I'm just going to go a little MIA until probably the first of the year because there's a lot of spending that we're doing. We're remodeling the house right now, and I just really need to take this time, me and my husband, to sit here, work over our finances, and get our minds right. And then even my one girlfriend, Sadie, I was just with her on New Year's. She told me the same thing. She says, hey, this month of January, we've been doing a lot. There was a lot of weddings and Christmas and family time. And I just need to stay home and really focus on us for right now. And hey, but excuse me, February 14th is coming up here soon. We should plan a double date together. So I thought it was really cool that even those people, my girlfriends in my life, being honest with me, saying, I'm not going anywhere. I just might be a little MIA because I'm doing this right now, which I think is very important. You should be your number one asset in your life. And I respect it. I get where they're coming from.
Yeah. Yeah, that's again that being able to I think you're leading right into the next one, but the review and reflect, being able to reflect on what your current situation is, and you're like, hey, we got some heavy spending coming up. I know for basically all Americans out there, we just went through Thanksgiving and Christmas and New Year's. Like there was some money spent,
Yeah.
so this might be that time of year to go back in and look at that budget and be like, all right, we need to tighten up a little bit here or there to catch back up because the last thing you want to be doing is carrying high interest debts month over month over month. Those are the things that are going to kick your ass and, end up getting you in trouble.
Yeah, yeah. Hey, and I want to tell you all too, the month of December, let me tell you, I was not freaking out, was probably not the great word to use, but the month of December, I was looking at my stats. I spent more money in the month of December than what I made, and that has never happened. And I was freaking out about it. I was like, Hannah, what did you do? But really, I think what happened is I was trying to pay all of these business expenses before the end of the year so I could get those for my taxes, right?
Yep.
So that's
Yep.
really what I think what happened. But it is good to review and reflect that because then I know, okay, instead of leaving it until December 30th to pay all these business expenses, let's maybe spread this out. Pay them in October, pay them in November. So you're not waiting until the very last minute to get all these things done. So reviewing is very important.
Yeah. I think again, like we were talking about, just sitting down and nobody's saying that you have to go over your budget every month or anything like that. But if you do it like, let's call it every quarter, once every 3 months, whether you sit down with your partner or maybe you're like Hannah, the single millionaire chick, and you sit down with your cats or something and you discuss what's going on. But it just allows you a little bit more clarity on what's happening. Because again, I know how frustrating it was before I got into infinite banking and I knew where my money was going, where I would make money and I felt like I made a good amount. But then at the end of every month, I was like, oh shit, budget's, blown. I'm back to zero in my checking. I hope, looking forward to going back to work and getting paid again so I have this money because I wasn't tracking my stuff. So as long as you're sitting there, you're going through that and you understand the flow of your cash, you're going to put yourself in a really good position financially
Yes.
for now and for the future.
Yep, yep. And that's what Nelson Nash says. If he says, if you know what's going on, you'll know what to do. So I'm
Hmm.
a huge believer in that. Let me say this too. A few ways that I've noticed that some of my folks are using, like their dollars from Payday. One example that I can think of right now is actually I have this bartender. All right, so he has like a base salary, goes to work, has that salary, and then he makes all this tip money. And so what he does is he budgets in all of that tip money that he receives, he flows it through his policy. I know in the past I've made some technical episodes about how you can design policies. There's numerous ways of how you can design an IBC policy, but specifically for him, it made sense to design this thing to have open what I like to call dump-ins or AKA additional paid up edition premium that was left open for him so that when the tip money comes in, he has a place to warehouse that into the policy. And then now he's holding it over there inside of his banking system instead of keeping it down at his checking or his savings account. That's just one thing that I'm thinking about. Another quick story, and then Sean, I want you to, if you have one at the top of your head, I want you to share one. But like, I even have this wholesaler. He'll do about 2 to 3 wholesaling deals in real estate a month. And so, same thing, his policy is designed so that he can warehouse those monies because this is like his side gig. He's got his main W-2 job that he does, but this is like his side gig that he does. And when that those dollars or the profits come in from the wholesaling deal, he always runs it through his policy first before he goes out and does anything else with it.
That's awesome. Yeah, again, it's so multi-useful. Like there's so many different things that you can do with your product, which is obviously why they call it infinite banking. There's an infinite amount of options, opportunities that you can use. I just helped a gentleman recently who's a pilot who is going to be moving and is looking to buy a new car and is also going to be getting married to his fiance coming up here soon. So he's like, hey, I want to get this policy set up because I know I'm going to buy this car. I know I'm going to get married, and that's going to be a big chunk of money. I make good money, but I have all this money sitting here. I want to start flowing it through this thing so it can continue working for me later on. And again, you feel a little bit less stressed about that situation when it comes up, either buying the car or the wedding. I know weddings aren't cheap, and
Yeah.
if that money's just sitting in your account, you're a little bit more likely to spend it. But if it's over here in your policy and you know that it's working for you and doing all these things, you're like, hey, game plan, we're good to
Gotcha.
go. Yeah.
Yeah. There's actually, you brought up wedding. Let me tell you this. This is crazy. There's somebody in dad's neighborhood. So dad likes to walk the dog and he's got all of his buddies that they walk their dogs together. And one of the dads had a daughter that was getting married. Her budget for her wedding dress was $100,000. Could you imagine spending 100 grand on a freaking wedding dress? I don't know. It's just not me.
Nope. I could not. I could not. And I'm not ashamed to say this at all. My wife and I, instead of doing, big wedding and everything, we're like, hey, let's do small wedding, so we could have an epic honeymoon, which we did. We did like 18 days through Europe or something like that. But when I sat down with her, and this is really important if you guys are getting into relationships with people, how important is the ring to you? How important is that diamond to you? Does it have to be a real like what is, what's the value behind that? And that may help you decide who you want to marry or not. But Amanda was like, I don't care about the diamond. You can get me this thing that looks just like a diamond, that reads like a diamond, that is a fraction of the price. And I would rather take that $10,000 or whatever that this thing would have cost and put it towards new home, put it towards vacation, put it towards investments, whatever it may be. So again, at the end of the day, we're not saying don't treat yourself. There's no way in hell I would have married her if she wanted a $100,000 wedding dress, because that's absolutely insane. But, you know, uh,
Yeah,
priorities,
for
priorities. So hopefully she's
sure.
running that through a policy. Hopefully your dad talked to her dad and they got, policies set up. Because if not, it's gonna break my heart.
No, right, right. Hey, too, so you just got back. It was a little bit before the Christmas time, I believe, but you went
Mhm.
on a big trip with your wife and your son.
Yep.
How, if I can ask, how did you fund for that? And tell me all the places that you went to.
Yeah. So we, of course, used our policy. So we knew that we were having this trip coming up. We had booked the flights pretty far in advance, and we're like, all right, year's coming up, Christmas trip. We love going out of the country because a lot of these European countries do Christmas pretty big. If you haven't been over to Europe for Christmas, whew, boy, they go all out. It's a real thing over there. So we saved up some money. We knew, hey, we're going to be putting this money here. We're going to end up going on this trip. We know about how much it's going to cost. So we went out there. We flew into Barcelona, Spain. We only went two places this time, often, well, two countries. We went to Barcelona and Poland. We went to two places in Poland, but with a kid, things are a little bit different traveling with not a toddler. At that time, he was a baby. He was like ten months old. But we put everything on the card. We're like, hey, let's get these points, let's rack up these miles, double down, all that stuff. We'd actually just got a new credit card because we wanted to get access to lounges and all that good stuff. And there was a 75,000 point bonus. And we're like, yeah, we'll definitely hit this $3,000 in the first couple months. We hit it right away. But ran everything through the card, put all the expenses on the card. And then when we got back, figured out what we spent, took the policy loan for it, and just now paying ourselves back. Set up that repayment program, making sure we're paying ourselves a little bit extra. You know, that interest that's going to go build our policy back up. But yeah, it kind of allowed us to do that double dip and not really worry about. I know most people go on vacations, they're like, oh, God, this is going to cost so much, and I'm just racking up these credit card bills, and you can't really enjoy yourself. We knew that we had planned for this. And again, normal people, maybe if they're not putting on the card, would just spend cash and then it's gone. Nope, you're missing that step. You're missing that one important step, and that's running it through the policy first, because that $3,500 that it cost us for that 2 weeks we were gone is going to be making us money for the rest of our lives. And it came from our son's policy, so we're just kind of refunding his policy, and it's just one pool of money, one pot of money, all flows to the same place.
Yes. Sean, I'm going to have you back on because really, I want you to share with my listeners too how you are integrating becoming your own banker with your son. I know he's young right now, not understanding everything. Probably, I don't know. Can he talk right now? I don't
He says Dada real good and Mama real good. So outside of that, working on it.
A little bit. But yeah, I even like with my parents because shout out this y'all. So a few of you have been asking me, so you guys have been seeing me talk a little bit about my new book, The Single Millionaire Chick. But also Chris Noggle and myself, we are writing a children's book together, and it is officially done. The illustrations are done, and probably by the time that this airs, the publishing phase will be done. So that's where we're at right now, is we're getting everything in line to get published out. But I really want to help you parents because that is a conversation that comes up a lot when I'm talking with people is, wow, number one, I wish I knew about this way sooner in my life. And number two, I wish I started with a lot more in premium with my first policies, are the biggest things I hear. But I would even add number three, I want to get my children involved right now so that they are at a different financial position than what I'm at right now at 55 years old, just making up a number.
Yeah.
So that book is coming out, but I think it would be cool too, Sean. I want to hear more about your journey of how you're teaching your son about IBC and privatized banking too.
Definitely. There's this book. I know, of course, super excited to get your guys' book because that's going to be awesome. There's this book that we picked up. I'm not sure if you've heard of Beaver Banker. It's
Yes,
another,
Becca,
yeah,
Becca White.
yep, yep.
Hmm.
So got that one back there, read it to him a couple times. Again, he turns one tomorrow, what he's actually
Yeah.
picking up from the information. But they do say kids in that early stage of life, that's when their brains are the most absorbent. It's like a sponge. So if I'm getting that stuff in there now, even if I'm saying it to him, he may not understand what's going on, but it's imprinting in his brain. And so we're trying to get those good habits. I haven't started reading him Becoming Your Own Banker yet because that might go over his head a little bit. But it is. I think it's so important to start kids early on, get them educated. I know that you just had, I'm blanking on her name right now, but the
Oh,
woman
Miss
from Wealth
Carmen.
Nation.
Yep.
Yep.
Carmen.
Yep. So I listened to the podcast with Carmen. I know she's doing it with her little 4-year-old. I think they're four. But yeah, she made that book suggestion talking about, I think it was habits. I saved it in my Amazon cart because I'm like, oh, we gotta get that and kind of teach our kid, you know, just all those important things that you feel like are skills that so many people are lacking as adults. If you can get it to them early, they're going to be in such a good spot financially when that time comes.
Yes, yes. No, and so there you have it, folks. I mean, four things that you should do after you get paid. Pay yourself first. Plan for the essentials. I want you to treat yourself, but don't do the mindless overspending. And then number four is really review and reflect. And again, I know it sounds super easy because I'm telling you it is. Like I mentioned, I get it. It is work. You got to do it. But when you really start to implement these new habits, it's just habits now. You're creating the cycle of the new normal for you, and it's not going to feel like work. So I challenge you. We're still here in quarter one of 2025. I don't know about you, but I'm feeling a different vibe. I was just talking with my girlfriend, as I said, and I think COVID is like finally over. Have you been feeling like that? Like we're finally over, we're flipping the page, and we are in this new amazing world, and let's get down to business again.
Yeah, outside of those commercials I have to watch where they're like, "Come get your COVID shot," and you're just like, "All right, chill. Homie, we're not doing that anymore. We're not doing that." But yeah, outside of the other kind of sad stuff that's happening right now, like the fires in California,
Yeah.
which is unfortunate to see, but I do think there is a bright outlook on 2025. And again, the more people, even if it has to be children, the more people we can get educated about this, the uh, the quicker the country is going to start trending in a very good direction.
Yes, sir. Yes, sir. Hey, and one more time, where can people find you?
Yes, so my podcast is The Cash Flow Chronicles. You can find that anywhere podcasts are found. And then my YouTube, where I put all of my videos talking about this, that, and the other thing, is Legacy, Life, and Retirement. So check me out. That's my social media on everything. And then the podcast is Cash Flow Chronicles. So, Hannah, I appreciate coming on here and chatting with you. Hope you had a great Friday. I don't know if you're a football fan, but there are some fantastic football games on these next couple days. So we are stoked to kind of sit back, relax, enjoy son's birthday, and watch some football.
Awesome. Good old football.
Yeah.
No, thank you, man. Thanks for coming on. And hey, if you're ready to learn about being your own banker, hit the subscribe button. I'm here every single Tuesday. And check out our resources in the show notes down below. We have the presentation, my book, and past recordings, video trainings, a whole bunch of stuff that we're doing every single week. And, let's make every payday a step closer to financial freedom. I'm on a mission, y'all, this year. You have the resources to take your time freedom back, and that's the only resource that we don't get back is the time in our lives. So I want you to really take advantage of your time. You're never getting any younger, right?
Yep. Oh, last thing I want to say is those nails, fire. Those look good. I
Actually,
say,
what's funny? That's where I'm going to next is my nail appointment. I'm gonna go see my guy Tin. I love Tin. He's my guy. Thank you,
awesome.
man.
Well,
I'll catch you next time, okay?
all right. Peace, my friend.
Hey, y'all, thanks for tuning in. If you enjoyed this content, click right here and it will take you to last week's podcast episode. I will see all of you beautiful money multipliers next week. See you then.